Markets go higher as bonds finally go lower. Having a plan and conviction are key to any market, especially a volatile market. Stay tuned, we'll discuss this and much more. Hello, this is Michael Loftus and welcome to Wealth and Wisdom TV. First up, if you find today's video of value, please consider subscribing. Also, show more additional information and links to today's video. Week ending, the numbers, 223. NASDAQ continues to be the strong performer. The laggards are small and mids, which is a little bit concerning. We want them to enjoy and be part of this party in order to see some higher numbers. Next up, let's go to the big charts. Here's a tweet that I put out last week, as I normally do during the week, about trends that week, anything happening. And here I talked about, there was some weakness going into Wednesday, but Friday matters most. In fact, wow, it mattered a lot this week. So let's take a quick look at the weekly chart. As I said, Monday and Tuesday, pretty weak, down about 1%. Little bit of move to the upside on Wednesday and Thursday, and then boom, up on Friday, 1.6%. Most importantly, for the first time in days, we saw buying pressure, not selling, buying, which finally we closed on a higher note going into Friday and also the weekend, which is a good sign. Next up, let's take a look at year to date. This is what I was watching on Friday. Literally, all day I had trades set just in case. And then here we had a couple key movements. One, we went above the 50-day moving average. I like that sign. And then we finally broke 27.42. 27.42 was a key resistance level, and we broke that. So I like to see that. Now, the only thing that concerns me on this chart at the bottom is VIX, Volatility Index. Never have we had a bear market where the VIX closed below 16. So we're still holding that 16. If we go higher, that is something to watch as we go forward. Another thing when I look at S&P performance year to date, 50% of performance is coming from 3 tech stocks. That is also a little bit concerning. Finally, here's our daily view going back to our last meaningful correction, 15 and 16. We had our lower channel, bounced off it. That was a good sign. Now we've got the upper channel. Let's see what happens here. If we break above that, next stop should be all-time highs, and then we will have decision day. Do we break above, telling us the bull market continues, or we fail at that all-time high and we'll be having a different conversation? So right now, signals, I'm still neutral. This is not really a great feeling surge up, but we are moving up. So I'm neutral on the short end and just being a little more patient here. How about weekly and midterm? When you look here, again, it looks good, bouncing off our resistance line. The only thing that concerns me here is at the bottom, MACD, momentum. We have a negative crossover there, so let's continue to watch that as well. Now, monthly, look at the monthly view here. Before I do, midterm is positive. Monthly, okay, also still positive, but if you look here, so far, this candle's red. We have not had a negative month in a long, long time, so we'll be interested to see if we can get a little more push to the upside to recapture that or see our first negative in several months. So long term, we are positive on that monthly chart. Now, I want to take away all the noise, all the candles and charts and MACDs and everything, and just look at moving averages. 20, 30, 40, 50-day moving average, meaning the average price for each of those days. And the only thing that makes me a little bit concerned, we do have a negative crossover. Your short-term pricing of 20-day crossing over your 30, 40, and 50, just barely. So let's watch that this week and see if we get a little bit more push to the upside and we'll discuss that as well. So when you look at that, you can talk about market breadth because they definitely correlate together, moving averages. Here's our 200-day moving average. Companies are above or below, no movement from last week. So not bullish, not bearish, no movement, kind of flat. 50-day, well, we had a little bit of movement. You can look at the top, S&P, 59%. Remember, above 60 is bullish, below 40 is bearish. So we're just there on the S&P. You look at NASDAQ, 71%. Clearly, that is bullish. That's why we see some good numbers there. And our mids and smalls at the bottom, still weak, 49 and 51% respectively. So a little bit concerning there as well. Here's a new chart, little busy, but if you take a look here, this is a weekly view of highs and lows. 2 weeks ago, we had 791 new lows on the NYSE, which is a pretty broad picture. So a little bit concerning last week, we still had more lows than highs. NASDAQ, again, is the only strong one there. So I'm looking at new highs and lows here as another thing that has me in a little bit more of a cautious stance. So next up, the Dow, as you would expect, looking better. At the bottom, momentum, MACD is pointing up, so that's a good sign. We're right there at 50 on relative strength. If we can move above that, that'll show some upside movement as well. NASDAQ, as we said, has been a big winner, continues to look good. Let's see if we can go there to all-time highs, which would be surprising. But everything is setting up for it to go further to the upside. Next up, let's go to the sectors. So the sectors last week, a little bit of improvement, not a big one. We saw materials go positive, health get a little bit stronger, financials get stronger, but we still have a lot of weakness here. When you look at REITs, retail, and utilities, all interest rate sensitive, and then consumer staples. So, again, we don't see a broad participation here, which is another reason why I am more cautious on the short side. So on my radar, again, I know this is disappointing, still showing some patience. There might be some opportunity. I saw a few things, might buy some individual stocks heading into this week, but still being a little bit more patient as we go forward. So next up, let's talk about treasuries. Treasuries was the big story last week. We got almost above 3%, but failed there and came back down. So that's a good sign. Okay, overall, that is definitely a good sign, which is why the market came back. And then you look at yield spreads, 10s minus 2s, 10-year minus 2-year, and we went from 0.66 to 0.63. So nothing alarming. We've been lower so far, down about 0.57. If we get inverted, that's where we really get concerned. But right now, it still feels like the bias is to the upside, but we see that resistance definitely in a 10-year at 3%. So next up, what keeps me awake at night? Well, as we mentioned, it's a very thin market right now. Few companies pushing the S&P, smalls and mids not participating, sectors not participating, so still being more cautious. The VIX, we talked about that. We ended a week at 16.49, so let's see if we hold that. And then the other thing is companies buying stocks back, the highest in history. So we had this pullback. Who was buying? It was the individual companies. So that's helped sustain the market. So not seeing that breadth, a lot of participation here. So that has me concerned as well. Here's another thing is the dollar. We see here when we went down, we have a classic head and shoulders, which Michelle will point out. Now we've had a double bottom. Double bottom, let's see. If the dollar starts strengthening, that is not going to be good for the market as well. So looking at that as well. And then finally, the big thing is this week, the new Fed Chair Powell is going to come out for the first time in Congress. Let's see what he has to say. Everybody's going to be listening to that to see if he moves the markets with maybe some hawkish views or dovish views, depending on where he's going to go. But he'll definitely give us a better picture of where we stand. Wrapping things up, fear and greed. Once again at 18, so fear is still driving the market. Our signals, again, short-term neutral, mid-term, long-term, or both positive. As always, we thank you so much for watching. This is Michael Loftus for Wealth and Wisdom TV.